Hello, testing. Is this audio coming through now? Yeah. All right. So I'm seeing audio here. Talk or anybody else. If you can hear me, awesome, great guys. Thank you so much. I appreciate y'all coming. I see a lot of people here. Awesome, great. So we're gonna have a really nice webinar here today. We are doing one on Camarilla pivots and how to trade them. So this is a really great system, a really great indicator slash strategy that we're going to talk about. What I'm sorry. Tim, on the back end here, you're not getting my audio. It seems like everybody can hear. So I'm going to plow ahead and message me if you need anything from me. All right. Sorry, guys. So, guys, we are going to be talking Camarilla pivots. Sorry for getting distracted there. Really great system. We're going to talk about why they're preferable to normal pivots. We're going to talk about how to trade them. I've got three really great strategies for you guys. And yeah, I'm excited for this one because I use the system a lot on a regular basis. It is good stuff. So, we're going to hop right on into it. And yeah, let's get going, guys. Hope you're all having a great Friday. Whoops. Let me switch over. There we go. Now we're cooking. All right. Talk. Yeah, I'll definitely check those out after the lesson here. This one's going to be a little more streamlined today, guys. I got a jet about in about an hour from now. I have a hard out, so we're going to get through everything we can. We'll get through the lesson, and then I'll try to get through as much of the extra fun stuff as possible because I love the Q&As and going over charts and stuff. So good stuff. Good stuff. So we're talking Camarilla pivots here, and I'm gonna make myself a little smaller here. Why don't we go over here? There we go. Cool. So maybe I'll be extra small today. We're working with a new software here, so pardon me while I learn the intricacies. All right, you got me a little smaller here today, but this should work. So, what are we going to learn today? We're going to be talking about what Camarilla pivots are, kind of understanding how they differ from standard pivots, like I mentioned. We're going to learn the mathematical foundation behind them and kind of what drives the Camarilla calculations and why I think that's a preferable way to derive pivots. We're going to talk about how to identify the high probability trading setups that watching the system can yield. We're going to go into risk management as always because you know me, gotta protect those gains. So we're going to get a pretty integrative trading system here. This is kind of a one-stop shop for if you like Camarilla pivots. This should have everything you need to trade them. So we're going to go over some live chart examples as well, and at the end we'll do more that you guys suggest, or we can just go through lists and see what we see. Time allowed, but I want to talk about these three setups I have. Start on that mouse cursor. These three setups I have, and how we can start implementing these in the current market conditions. So we have some stuff to talk about here. Let me. So I'm trying to hide this mouse. I can't figure out where to hide it. We'll do that. So the first section is just going to be understanding these pivots. They are really interesting, but you kind of have to know a few things first. So Camarilla pivots are essentially a variation of the classic pivot point system. They're developed by Nick Stott. And the cool thing about them is that unlike, sorry about the notification sounds there. Unlike traditional pivots, they're based on a mathematical relationship between price ranges. So they use fib ranges or fib ratios of the previous price action to kind of project a range forward. And I'm not going to lie, I don't understand exactly why it works so well, but I've just been watching these pivots for years now, and they're very responsive. So for me, this is the way to go in terms of just easy pivots, in terms of just having them in an indicator when you're running through a billion charts and you don't have your own pivots super fine tuned on the chart. This is a really good just place to start before you kind of fine tune your levels or anything. So we have some key differences that we should go over here. There we go. So the standard pivot points, they're just going to use simple mathematical averages. So it's like the high plus the low plus the close divided by 3, something like that. And they generate 3 support and resistance levels typically. And, they're based on math, of course, but they're just kind of rudimentary. You don't have as much, you won't notice as much fine-tuned interplay with these levels as you will with Camarilla levels, I've noticed. So I think why this is because these Camarilla pivots use the Fibonacci ratios. So they're going to use 1.1 over 12, 1.1 over 6, 1.1 over 4, and 1.1 over 3. And this will generate 4 support and 4 resistance levels. So, you've got your L1 through L4 for the low ones, the supports, and H1 to H4 for the resistances or the price targets up above. Sometimes you'll hear these referred to as S4 and R4 for support and resistance. But, either way, this is what they're talking about. There's also expanded levels to the fifth and sixth, and these we're going to talk about what they're used for later. But essentially, each of these levels plays a key part in one of these three systems. So they all have their place. They're all kind of working together to give these systems valid entries. So I think they're much more actionable than just traditional pivots, and that's why I use them. I almost always have them on my charts. And yeah, they provide great reference points for where my targets will be and how I imagine price will play out through the day. So they generate these based on the previous day's range multiplied by these specific coefficients. So it still is operating on the same basic principles of calculation as any other pivot indicator. But essentially, we're trying to see on the chart where these breakpoints are, where price is likely to go into mean reversion, or where price is potentially likely to break out. So that being said, I'll give you the actual. Let's see. Sorry, I'm trying to figure out why my screens aren't changing on the slide here. Bear with me 1 second. Looks like I'm going to have to reshare my screen here for a second. Give me 1 sec. There we go. Okay, great. So moving on, here's the actual formula here. And what we got is, the H1 is equal to the close plus the high minus low times those coefficients that we talked about. And so you can see they're all basically the same. You don't really need to know this. It's just good to know in case you want to mess with the calculations yourself or anything. But they're really great just out of the box here. So I don't mess with them myself. Let's talk about why they work so well, though. So the effectiveness primarily comes from their foundation in market psychology and the natural tendency for price to just mean revert. Prices, they're always going to revert to the mean given a large enough time frame. And so this is just one way to kind of frame a chart and see, with quantifiable signals when it may be looking to go into that mean reversion zone or when it may be looking to expand out of a range into a breakout. So the Fibonacci calculations, they align with natural market rhythms, and they tend to provide levels where institutional traders will place orders. And if anybody's been trading with fibs for a long amount of time, this is like an old school trader thing. This isn't some new technology. Fib levels work. They're very responsive in general, and watching what prices do as they navigate through the fib levels of a range can give you a ton of information. So to me, it makes very logical sense to construct a pivot system based on these kind of parameters. And yeah, it works really well. So let's get into a little bit of the psychology behind these Camarilla pivots and trading them. So there's certain kind of characteristics to each levels. So we have our L3 and our H3, and this is kind of the traditional trading range. If it's not going to break out and go crazy, it's probably going to oscillate roughly between these levels. And 80% of trading days or so, price will pretty much just stay within the bulk of these, or at the very least, the value area will stay within these levels. And they act as really strong intraday support and resistance levels. So they're really good for if you're trading in a range and that's the type of trader you are. This is going to be your bread and butter. They're going to hit very often, and they won't be explosive gains, but they'll be very consistent gains. And so, I love scalping mean reversion and then just keep doing that and building up a cushion and then finally trying to catch a breakout on a runner or something. So this is a big part of my trading day. I'm watching these levels, I'm trading in between on a range, and then, I will start to try to free roll a position for the overall direction that I'm kind of looking for. So that's how I use the L3 and the H3. They're definitely one of the most important levels on the chart, but I think the most important are going to be these L4 and H4 levels. So these are going to be much more important because they're going to be like the last line of defense for bulls or bears respectively before they just get, get torn to pieces and essentially you see price expansion out of the given range in a breakout. So these don't happen super often. Breakout traders, they are is mean to say, but they're losers statistically. They're not going to win half of their trades. The winnings they make are going to be very much, bigger than their losses. But, it's just they don't always happen. They happen, or it's much more likely that they fail. So yeah, only 20% of days you'll actually see these breaks beyond these levels. What you should be looking for when you are considering a potential L4 or H4 breakout is you're probably going to want some kind of catalyst or a very primed higher time frame chart, because you need some reason for this thing to be able to move beyond its ATR, beyond its average ranges. And often there will be a catalyst for that. So yeah, when they're broken, they tend to lead to significant trending moves as the market leaves a balance of sellers and buyers in a range and enters price expansion where buyers are outpacing sellers, or vice versa. And so when you get these moves tend to stick. They tend to have a lot of legs. So you can say, okay, we broke this pivot. So now every dip, I'm going to try to just kind of catch this move up here. And yeah, I love trading these, but I don't get them a ton just because, only 20% of days you're going to see them. So we always keep a look for these levels. And when we see price interact with these levels, our first inclination is usually to look to fade them, because that is a pretty high probability setup to fade these. You'll get about 4 out of 5 trades right, and you'll get a chance to fade them back to your L3 or L4 levels. I'm sorry, L3 or H3 levels. So really textbook trading off of those. They're pretty cut and dry. But we're going to talk more about like specifics regarding that strategy in just a little bit. First, I want to talk about the fade strategy for the first levels, though. So that's going to be the L3 and the H3. And essentially, you're going to buy near the L3, sell near the H3. Super simple, just mean reversion throughout the day. You'll get multiple setups of this on just about any chart throughout the day. And if you read it correctly, they hit about 4 out of 5 times. So yeah, high probability, lower reward trades because, of course, they're trading within that range. But sorry, I lost my train of thought there for a second. But this is like a really good just tool to have in your toolbox. You'll see these setups, and it's so much nicer, even if you're a breakout trader, to say, hey, okay, maybe I'm not getting the breakout today. I can still make some pocket change here. I still know how to trade this range of a market, So yeah, this is the fade strategy, and we're going to go in more detail on these too, but just running over them real quickly here. The breakout strategy happens about 20% of the time, like we're talking about. That's going to look like an explosive move through that H4 or a sell below that L4. And we're going to expect that trend to continue, like I said, and these are lower probability but higher risk or higher reward. And then the reversal off the L4 and the H4, I really love taking these. You don't get them every day, but when you do, they're really high probability, and you can often get bigger a bigger win than just off the L3 or H3 levels, since obviously they're higher, more extended. And if they get rejected there at the major level, they're more likely to revert to mean a little bit deeper than just that H3. So medium probability, medium reward trades, I think is a fair way to put these, because there will be times where they just needed to pull back and need to retest that breakout, and they get the breakout retest and they just go off to the races like any other H4 breakout. But there is good money to be made with all of these, and I think the best thing you can do is kind of figure out what type of trader you are and figure out which one of these fits your style best and start with that. And then you can kind of watch what the price does as it interacts with the indicator over weeks, and kind of hone your strategy from there. But let's talk about setting up our charts here too, because I think this is pretty important. So the first stuff, pretty basic. Just you need a trading platform with custom indicator capability. So I use TradingView. That you'll find this on Thinkorswim, Sierra Charts, just about anything that you would use. This is a very standard one. If you don't have it, but you have access to coding your own on your platform for whatever reason, well, you have the parameters there from earlier too. So you could whip it up yourself. So the Camarilla pivot indicator I use is actually called Camarilla Pivots Extended, I believe. Let me double check on the name. It is, called Expanded Camarilla Camarilla levels, and it's by Yeah, really. He's a really good trader. He's a friend. So yeah, he has a great indicator. It's basically the same basic thing, but it also expands those the 5 and 6 levels on both sides. So I like using these because I do tend to take those breakout setups when I get them, and for me, it makes very logical sense to just keep those on your screen and yeah, have them for the targets on the upside. So let me navigate back to here so I can see my comments. Awesome. And so, moving on, we need a volume indicator because we are trading. We need to know about volume, especially when we're talking about mean reversion at a key level or breakouts at a key level. Volume is a very critical component of that. We need to see the high volume and we need to see that pop through. And then last but not least, we have some optional. I think an oscillator is the best, but any kind of supplementary indicators just to kind of help build confidence, like we're always looking for. So RSI, MACD is great. I think these fit very naturally with them. But I also, of course, use my traditional volume profile, my moving averages, all the basics. Anyways, in terms of the best practices here for your time frames and your actual indicator settings, I think that it's really important to have a 5 minute or a 15 minute for entry. If you're a really fast scalper, all right, do your thing on the 1 minute, but please have one of these charts up at the very least to kind of make sure you're not getting kind of too locked into a 1 minute candle, pattern that's missing the forest for the trees of the larger 15 minute pattern, something like that. Let's see. So, I also think the hourly is just really, really useful for the context of the trend overall. So I always have an hourly chart up. And then multiple times a day, usually at least 3 times a day, I'm flipping to the daily chart and seeing how that daily candle is developing. So just having all these in your head is going to give you the context you need to say, okay, this is a chart where I'd like to look for that H4 breakout. I think it's primed on the higher time frames, and I'm going to be looking for that setup on here. Whereas perhaps if a chart's more overextended and there's a lot of sellers overhead, when it kind of goes into that breakout level, I might be more inclined to be really ready to pull the trigger on a short from that level. So yeah, pretty textbook stuff there, but I think it's always important to mention. So this is interesting to me because this is how I set my Camarilla pivots up visually. It makes sense intuitively to me, but if something makes more sense to you, of course, do it that way. But based on the kind of characteristics of each of these kind of levels, I think it's important to have them differentiated on your chart. So I'll show you my charts in just a second. But what we got, move myself there. Okay. But what we got here is, for me, I do my H4 and my L4 levels in bold. So all of it like really thick and yellow. And for me, it's kind of like, it's like caution, yellow. It's like slow down, do not cross yet. We need to see a big break of this level. If we do, then the range is expanded. But I got to be worried. I got to be cautious here, and aware. So that's why I have them in bold yellow, because they're those breakout levels. The H3 and the L3 levels, they're going to be thinner, and I have them in blue. For me, it just kind of like makes sense, like, with my whole charting like philosophy, I guess you could say. When I'm charting out resistance, I'm usually doing like a darker color, or like a more like for me, like orange or yellow or red or something will indicate resistance, an area that'll be hard to move through cleanly. And then something cooler or something lighter, like a light blue, for example, I'll use that to kind of indicate this is a zone that's easy to kind of cut through or whatever. So for me, this is kind of how I frame it to myself. Everybody has their own kind of ways they conceptualize this stuff. But then I have my H1 and my H2, and then my L1, L2s. These are going to be really close to the point of control on the chart, on the daily chart, intraday chart. So they're just going to be really close to that pivot, and you'll see them tag very often, but there's not really that many good setups you can take off of these. They're more just kind of they're kind of take profit targets if you faded a higher time, or not higher time frame, but like the big H4, for example, or a smaller H3, one of these above levels. You're just looking for these as potential take profit areas. So they're thinner for me. They're lighter color, and they're less visually kind of grabbing. And then, you have the H5 and H6, L5 and L6. I have these on my bottom side of the chart in red to kind of show their like extension targets through that, the L4, the yellow L4. And then I also have, my H5 and H6 in green, just because, hey, they're reach targets, So whatever's intuitive for you, but just make sure you're kind of differentiating them based on their characteristics like that in some way or another. So next up, let's actually hone into these high probability setups that we mentioned briefly, and we're going to use some examples here. And this is probably my favorite part. So first off, we're going to talk about the L3H3 fade trade here. So what we have here is actually today's intraday chart of USAR. These are 5-minute candles, and I'll walk you through what I am seeing here. I did not take this trade. This was in retrospect. I was looking for examples, but I did. I do see a lot of these setups very replicable, appear very replicably throughout the market. So, you just look for something like this, you'll find it pretty often. So let's talk about what we're seeing here. The entry criteria, first off, for this setup is price approaches L3 support or H3 resistance. So for this one, first off, we're looking at this little trade here. I should probably zoom in more. I can, if you guys are having trouble following, I can pull this up on my big chart, but I just wanted to have the parameters right here. So we're going to talk about the parameters real quick first. So price approached this blue level right here. Over on this side, it did not draw it out. It just projects it in the middle of the day there, but it did approach that there, and there was clear rejection. So you could have taken that trade on the weakness off of that H3, the resistance, the blue resistance, and then we are seeing volume decrease from that point after the morning pop. So volume decreases as price approaches the level. We were starting to see that in the 1-minute chart there. And what you're seeing is also up here, RSI. See a little dot up there. So RSI was showing overbought, and we were starting to see top wicking into that level, and the volume was starting to decrease as that happened. So the other aspect here is no major news events. So there is a lot of kind of speculation occurring in this sector in particular. It's USAR is they're one of the only American companies that produces and refines rare earth minerals. And with the Chinese tariff stuff coming out in 4 days, it'll resolve in the next 4 days, if not sooner by then. So there's going to be a lot of kind of froth in these. I think there will probably be a lot of fake breakouts and fake breakdowns until we get that confirmation. Just something to keep in mind that there wasn't specific news, but it was on my radar that, hey, maybe this thing could front run. So I'm looking for this long to do the breakout move. But this week I was thinking, hey, it probably is going to fade the first move, the first attempt there by speculators. And that is what we kind of saw. So we saw into the the H3 there, decreasing volume, top wick, and the RSI is overbought. So that was enough. That would have been enough for me to take a trade. And where I would target is right down to the H3, this blue line right here. So I'm sorry, the L3. So essentially, the entry rules are long at L3 when price touches L3 with a bullish candlestick pattern. So that would be you could have taken that trade long off of here, where I got out of the short, or what I took or would have taken is the short at H3 up here. Enter when price touches that with a bearish candlestick. And in terms of stop losses, you want to keep them pretty tight. In general, they shouldn't cross over they shouldn't cross over the level substantially. I would say, like, if you're trading futures, 10 to 15 pips is probably good. If you're trading just stocks, I would look for see here, this is kind of like a head bonk. It did close above, but then it rejected. So I would want a little more room than that, but definitely not more than half of the distance between this H4 and the H5, if that makes sense. Because we would just want to see a little overshoot and coming back. So I would probably put mine right about there. I'm sorry, this is the breakout trade, not the first one here. So I would put, for this one, I would put it above the that first wick up there. I think that looks pretty good. So that's a decent amount over the level that we're fading and expecting it to stay under. And if we're seeing the top wick on the second push before that high, I think it's pretty unlikely that it would find the juice to kind of buck all of the confluences of fading that we noticed and just power straight up through that. So yeah, that's how I would frame that trade. And then we do have a second trade over, whoops, there, or over here that we're going to talk about in just a little bit because that's a different setup. That's off of this big, big H4 level. So that is our the L3 to H3 fade trade. You get a lot of these throughout the day. So we saw this one that I mentioned. You could have taken a long from that wick up here again. You could have then shorted just about the H4 as well and just saying, hey, okay, maybe it won't make it all the way down here, but I'll just trade this back to VWAP, somewhere around equilibrium. So using these levels, you do get a lot of looks if you're a day, scalper or a day trader. Like they're just very actionable for trading ranges like this. So going on from the L3 to H3 fade, oh, I'm sorry, I forgot to talk about primary targets specifically. So yeah, the opposite L3 or H3 is generally what you want to go for. If you're seeing trend starting to weaken before then into the H1 or L1 levels, you can take profit there. It's always better to lock in some when you're not sure if it's going to keep working than wait for it to come back and potentially take a loss. So the risk reward is typically 2 to 1 or better. It's not going to be super crazy, but generally you will be able to kind of define your risk pretty tightly and just get these kind of base hits and stack those up. In general, mean reversion strategies are never going to have crazy good risk reward, but using these levels, you can pinpoint it pretty good. So for example, for the morning trade there, by putting the stop over that first candle, that's a very, very tight amount of risk compared to the reward down to this level. I would say that's probably 5 to 1, if not higher. So, you do get good opportunities if you look for them. Alrighty. So I am seeing some questions come in. I'm going to stay on topic here and power through just because I'm a little short on time this week, but hopefully I will have time to get to all of y'all after. And if not, shoot me a message on Discord and I'll get to you this weekend. Where was I? There we go. Next setup. So this is the breakout trade. These are the most fun when you get them, but they don't happen super consistently. So let's talk about the criteria here first. So price needs to break cleanly through the big chunky H4 or L4. We need to see volume increase on that breakout. And then we're going to need to see, obviously, the momentum indicators support the direction. We don't want to see any rejections there. That would not be conducive to a breakout, believe it or not. And then early in the trading session is when we want this to occur. We want to basically see the chart cooking this range and giving a lot of time left in the session to push higher and expand. So if you see this in the beginning of the day, it's a lot more likely that it'll play out and you'll get that expansion compared to if you see price going up into this level at the end of the day. Then generally it is a sign of strength, but not immediate strength. Often they'll need to dip back in on the next morning before they can actually test that level and push higher again. But when you do it in the morning, you have a lot of room and a lot of firepower, so to speak, to kind of push it higher. So that's what you want to see. And now let's talk about the specifics of this trade here. So this is Ethereum. This one is from like last Wednesday, I want to say, and I did take this one. So this one here essentially was showing a lot of potential accumulation over the past couple days. It was outperforming crypto, outperforming most risk on assets. So it was already on my list. It's Ethereum if you're not familiar with ETHA. The long was, or the setup was essentially, I was looking for this breakout. So I wasn't surprised when we got the surge up to it. I did miss it. I did miss the move out of open, but I was thinking, hey, if this has legs, it's going to do this and then I'll get in and it'll be a clean trade from there. So that was the thesis, that it would come up really fast and test this pivot pretty early in the day, this major level. It would show strength and eventually break through, and I would be trying to long on the volume pop through. So it did shake me out a tiny bit. I stayed in the trade, but I entered on the high volume through the level, came back a little, no worries there really. This one, not great. It was overextended essentially, short term. So this is where these trades can be a little bit tough and you can get stopped out more because if you're expecting a big breakout and a lot of power and it shoots up past your short-term moving averages, for example, your areas to limit your risk, it's like, okay, if you just take the leap of faith, like I kind of did, I said, okay, volume through this level, I think it's going higher. Often it will come back a little bit, but it won't come back to like VWAP or this 9-minute moving average, so it'll kind of lock out sellers. So sometimes you do kind of have to just send it and say, hey, if it rejects hard and this candle closes red, maybe, or if it closes through something here, I'll take the loss. And it is a little bit of a wider stop than I would normally like. So that's just something to keep in mind. I think what you could also do is just watch it consolidate into this level. And then when it gets the volume pop through again, maybe through this previous candle's high, that's probably a safer entry. But what I did was just straight up send it through the power candle through here. We had just seen a really big high volume there, and the volume was still well above the average, and we were closing at the high of the candle through that key level. So essentially what we see is that digestion for a few candles before immediate pushing up here, and then we get into our H5 and H6 levels. So I sold half of it there, and I just waited, and it started to set up again and gave another entry. So for a lot of these breakouts, this can be really nice because you can start with the breakout if you catch that, and then you can just either keep a runner or you can keep this on your list and just keep playing it as it sets up and keeps going, because often it will set up and push higher at least twice, usually 3 times, maybe more. So if the move is big enough to bust down a big level like this early in the day, you can keep it on your list for a trade that's working, so to speak. And if you're looking for something to long, when the market's pulling back a little bit the next day, there's a great candidate. So that is the setup there. And, same deal with the stops. You want to keep them pretty tight, below or above the L3 or H3. Essentially, you want to say like, okay, it should not come back to the previous fade level once it tests here. Maybe it comes back a little like these candles, but it should not come back down to where it kind of broke out from the base, if that makes sense. So we are going to talk about profit targets really quickly and then move on to the H4 fades, which I think are really, really fun to take as well. So the measured move is going to be your main target, and that's going to be the distance from H3 to H4 projected from the H4. So you can do that. You can also just do these H5s and H6s like I have. That's not the that's kind of like the expanded system with the expanded levels. This is more just kind of traditional measured move shooting for that target. Both totally valid. You could also just look for the next significant technical level above, whatever that may be, a previous major high volume shelf, a gap, whatever it might be. And so these breakouts, they tend to have really good risk reward just because the winners work so well. The losers will have a wider stop than your mean reversion trades, your L3 to H3s. But if you factor in, how explosive the winners can be, it is definitely on the higher side of the risk reward overall, I'd say. So the last setup I wanted to talk about is reversal trade at extremes. And so this is where price reaches that L4 or the H4, that big yellow, but fails to break it. And so what you see is that it comes up to there. This is the cleanest one, but it overshot in the morning here on this BABA chart. But I'd like to look at this one in particular, where it comes up and shows a sell signal into our H4, into the big yellow level. The reversal candlestick starts to play out this is a 5 minute. On the 1 minute, it was a top wick closing near the low of the candle. So then ideally you also have divergence on momentum indicators, or some other confluence. High volume on the rejection is always amazing. This one, did I cut off my volume? Whoops. Well, we can check this one out on the real charts after, but I'm pretty positive this had quite substantial volume on this follow-up red candle here, and it was following the volume that started coming in off of this rejection from this level here. So if you took this, then you could place your stop above the previous high of day. I think is probably the best place, somewhere around there. And you could also place it tighter and just be more willing to get stopped out a little bit. But I like letting the trades kind of breathe and do their thing. And so that's the entry criteria. Moving on to the specific rules, we're going to enter after that bullish reversal pattern. So I'm sorry, the reversal pattern of the bullish attempt. And so then we're going to get in right there when it has that confirmation on the volume. I like to wait for the candle close as well, usually a 5 minute, but sometimes a 1 minute is all they give you. And then you put your stop loss beyond the H4 or the L4. So essentially you're saying if this fades, it shouldn't push higher. Maybe it does a quick stop run. So maybe I'd put it right over 122. That seems like a good area. Like any candle close over 122 and I'm out. So pretty clear cut straight move down from there. And let's talk about what our targets are. So we're looking for that L3 or H3 primarily. This one was a really explosive move. So the L3 was actually just right here, this blue. And so it took that out pretty quick. And then you got, this was actually, this is L3, this is H3. And then so H3, L3, I'm going crazy here. So I call them SRRs. I'm trying to use the more common terms, I guess. But for me, this is support and this is resistance here. So essentially, you would take profit there. If you're really scared, I wouldn't. I would wait for this low swing here. So that's what you're really looking for. If it rejects the big upper level, it should come down to at least one of the main, the significant downside targets here, the downside levels. So you could tranche out there. This one was explosive and just kept on pouring down. So I would have definitely, if I didn't get out there, I would have gotten out at the I'm sorry, what are we calling it? The S4, the big significant support level essentially. So we're trading from one to the other more or less. And this one actually kept pushing even lower, and we got a nice flush to our S5 and S6, I believe, down here. Yeah, it looks like it. So these ones can really just keep running once they reject as well. But in general, you don't want to get as greedy with these as you would the breakouts, because this one rejected the breakout. So in general, we're looking for reversions back to mean or a little bit past that is usually what happens, because it tried pretty hard to push up. So it'll probably go pretty deep into the current range, if that makes sense. If it does hold the equilibrium, if it mean reverts back to VWAP, for example, and then finds strong buyers again, well, that's probably a sign that it's going to keep cooking that breakout level until it breaks through. So these are the three most actionable setups, I think, off of these Camarilla pivots. But you can just literally trade them level to level. You want to have higher time frame, context or whatever. But in general, they're just good actionable levels to have on your screen. If you feel like it's too cluttered, you can take off the extensions and you can take off the inner ones, the S1 and S2 and the ones, the twos, the fives, and the sixes, because those threes and the fours are what's really, really important. But yeah, and no matter what, I think there's a lot to be gained just from having these on your screen. And did I miss anything on this? I don't think so. And yeah, from there we should just talk about risk management just a little bit. I know it's not the funnest, most fun part there, but it's important. So it's important to have position sizing rules. You want to have that 2% rule where you're never risking more than 2% of your account on a single trade. If you're a newer trader, this should probably be a 1% rule. We're going to calculate the position size based on the stop loss distance. If you're not familiar with this practice, I have a whole webinar on that as part of the Trading Foundations Mastery Series. So check that one out if that's new to you. But yeah, Trade the Pool has a great position size calculator. You should always have this stuff worked out and dialed in before you actually enter the trade, and it'll keep you safe. So for specific to Camarilla trading, I think the fade trades can be taken with a larger size. So the first setup, those the L3 H3 fades, those you can play a little bit bigger. The breakout trades you want to take with smaller size, just because if they work, you're going to get paid extravagantly anyway, and if it doesn't, you don't want to lose too much because they're not super high probability. So they are almost always worth a punt, but very rarely worth a large position size. So if you have a key level and you're seeing that it's being respected, you can scale in, as price dips back down to it, and you see price absorbing here, shares absorbing there. So that's definitely something you can do with these, where in general you would be looking to scale in. Maybe you're trying to fade the third support level. So price comes down to the third support. You think that it's going to go back up, but you're also thinking, hey, maybe it might go down deeper to the fourth major support, right? So you could start a position at the third. You could have a stop beyond the fourth, on a candle close like beyond that one, and then you could add at the fourth. Then if you get any bounce at all off of the fourth major level, which you almost always will, right? Because it's such a big level, then you'll probably be very close to break even on the mean reversion move just between that fourth support and the third support back up there. So by scaling into positions like this, you can trade around a core position and you can keep that position a lot safer. So say I entered early at the third support, it went down to the fourth support. I added, it went halfway between them. I took half my position off. Now I'm break even essentially, but my entry is lower than that S3. So if the trade ends up being right, I'm already in the profit by the time I got to my original entry. And you can keep doing this kind of stuff as it trades through the range and just kind of pocket small wins and allow your runners to really do what they're going to do overall. So, what else do we have here? Partial profit taking is important. We just talked about that. So just taking half profits at whatever the first target is, even if it's a minor H1 or L1 level, it really gives you room to breathe, room to maneuver, and then you can move your stop to break even right after that, and you've guaranteed a winning trade. You won for half of it, and the other half you're not going to lose. So if you just do that, you're pretty set. Honestly, it's hard to lose if you're not taking terrible setups and you're practicing risk management like this. So just after that, let the position run to meet the target. These runners will often be the bulk of your trading gains, even if it's a 1/8 size position. If you have a position that's up 100% and you took, you don't need that much. That's just as good as a full size position going up, 5% or whatever. So always just lock in profits as you go and keep trading around positions. In terms of stop loss management, you never want to move your stop against your position. You make the stop based on the information you have when you enter the trade. If you're moving that's really dangerous territories. What you should do is take the stop out and wait for your initial idea to be viable again, either for the same criteria or a different criteria, or you gotta treat it as a new trade essentially. So trailing stops using Camarilla levels as the new support or resistance is really nice too. That's a good thing to do if you're just kind of trading the system and you're just like, I don't know where to put this stop. I want to lock something in for sure. Just put it under the last level that it reclaimed, and then okay, if price reverses that what was previously resistance and now is support goes back to being resistance, well, no harm, no foul, you're safe. If price is stalling, another thing you can do is do time-based stops. Like say, if this hasn't done what I expect by X or Y, then you can say, okay, this is also invalidating my setup. I don't do this unless I'm like expecting a breakdown, because if I'm looking to play a breakdown, I want to see price to come down to my level and just hang out there for a while. So like if I don't know. In general, I just don't find them as viable for my trading style. But if they work for you, that's totally great. So let's see. Sorry, losing my train of thought here just a little bit. It's been a long week. So maximum trades per day, I think, are really important to employ with any system, but especially with cam pivots, because you do get so many looks. So it's important to not just take every single one that looks vaguely like a setup, and you'll probably get some really clean ones if you wait for them. I think probably 3 to 5 cam trades a day is where you want to be, just because there are going to be multiple setups, but you don't want to get caught up trading every little H1 to L1 setup, because even if you're right, it's kind of like a waste of time. You're wrong once and you lose all of your gains from your past 5 little scalps. It's just much easier and more sustainable to trade off the key levels and not burn yourself out on every possible trade. And a big one, I think, is to stop trading after 2 consecutive losses, and definitely after 3. If you're not seeing the market right, it's just really important to kind of reassess what's going on, and just get back in touch with yourself and figure out what you started doing differently or wrong. I am running out of things to say about stop losses. Let's see, set maximum daily loss to I think it should never be more than 6 to 8% of your account. If you have 2% per trade and you have 4 positions on, That's 8% there, and you should be reconsidering things if that happens, just because your thesis was wrong. You got stopped out on everything in one day. So yeah, a maximum daily loss is always super important. Stop trading when you hit the limit. That will do wonders for you. This is still something I work on too. I have trouble with this, like calling it when when it's been good. When trading's good, you always want to keep trading. But when enough is enough, when you've made more than you typically do or made more than your target, that's good enough, and it's a great time to walk away before mistakes happen. So some real quick common mistakes here. Ignoring the context of the market is going to be a common mistake in just about any setup. So that's why you'll hear me talking about it a lot. Essentially, trading these Camarilla levels without considering the overall directionality and just action of the market. How strong is the move? Is it just trading sideways? Is there high volume? All these things are really important to kind of figure out what's going on when we're solving the puzzle of where price is going next. So just blindly following any system that projects day-to-day levels and isn't necessarily incorporating longer term aspects of the chart's technicals, these can be tricky to, like, you can get caught up thinking that you have a valid signal when in reality there are stronger forces at work on higher time frames, or with overall market conditions. Like, maybe your stock seems pretty good, but the index it's tied to is having a hard time. Or it's really important to just be aware of a little bit of all of this when you're trying to place any trades. So don't try to fade trades in strong markets. Don't try to play breakouts in ranging markets unless you have reason to believe that it's finally time. Maybe something like our Bollinger Bands and Keltner squeeze system that we talked about. What was it, last week, 2 weeks ago? So in general, you want to stick with the trend. The trend is your friend. Keep playing the market conditions you have until those market conditions change. If you are banking or betting on market conditions to change, if you're betting on that breakout, then you got to size down, essentially, because hey, they don't always work. So the solution here, like we said, always check those higher time frames, adapt your strategy to the market conditions, and just more confirmation is always better. So if you're unsure, just keep looking until you either feel better about it or see something that's enough to cause alarm, and reevaluate your thesis. So next up is just poor risk management. I won't bore you with it. It's very simple. If you risk too much per trade, or if you don't set stop losses, or if you revenge trade, it will go poorly. Just I've seen it so many times. It's just try to not fall into the habits, because they're hard habits to break and they're very expensive habits to have. So, oops, got an extra slide in here. There we go. Over trading here. So that's number 3. Basically, taking every setup like we're talking about can be very detrimental. Trading low probability, low gain setups like these H1s, H2s, you're just kind of, just trading pennies. It's not really worth your time or your effort. It'd probably be better if you spent the time studying previous higher probability setups and waiting for those to materialize. So yeah, forcing trades during quiet market hours or at lunch or something, it's just a recipe for disaster. You're just going to get stuck some way or another. It's not worth your time. So solution here is the focus on those high probability, bigger levels, those H3s, L3s, H4s, L4s, and just wait for the confirmation. You don't have to rush into these. If you're playing off a major level, the move will be significant. So you don't have to catch every inch of it. One of my favorite quotes in trading is, "I made my fortune buying late and selling early." Like, you don't need to catch the whole move. Catch the high probability, make sure it's confirmed, take it to the obvious level, get out, wait, see what happens, This quality over quantity approach will really help set you up in the right direction. And I think that that's the way you want to be looking at this stuff. So mistake number 4 is inadequate preparation. And it's basically would look like not calculating your levels before market open. We have indicators, so this shouldn't be an issue. I hope it's not an issue. But man, if you're hand calculating, God bless you. You care a lot more than I do about this stuff. So missing important, if you're missing important news events, if you don't know the kind of context of the market on a given day, you got to be really careful. You could be you could get an alert saying, "Oh, this is trading up into its H4 and I want to fade this name." and then you realize, oh, there was some catalyst that I wasn't aware of. This thing's going up 20%, and that's no fun. So always keep an eye on that, and just be ready for the market to change. You want to play the trend until the trend stops, but you never know when that could change. So just keep that in mind, that you got to have a contingency plan. So yeah, solutions here: calculate all your levels before trading, have the economic calendar easily accessible. It's in my bookmarks bar and it will never leave. I want to have it just one click away, and then just have multiple scenarios planned. Like I said, those contingency plans. So we have talked about strategies. We've talked about the indicator itself. We've talked about how you can mess up. I'd like to go over just a few key takeaways here before I send you all on your way. I'll answer some questions too before then. But yeah, so we have the Camarilla pivots. They provide precise mathematically based support and resistance levels. They're going to be very reliable compared to normal pivots. 80% of trading will occur between those L3 and H3. You can consider this your value area, and it's perfect to fade in between the extremes of this area. If you get the breakout of this value area of this H4 or L4, then you tend to have, really significant moves, those actual breakouts. So in general, we fade the L3 and H3 and expect mean reversion. And if that fails, if it seems to have a strong directional bias to one end of the range, then we're looking for price acceptance up into that H4 or down into that L4, and then eventually the breakthrough on volume. So market context always is going to trump the individual setups. So, I can't tell you how many times I've seen a great setup in small cap and then, just a bad jobs report or whatever may have been bringing the indices down that day. It just completely obliterates the setup. Shorts have a foothold to sell into. They can, really, really just abuse the fact that these are, all downstream from the indices and the overall market structure. So, this is more valid or more relevant and more of a potential worry when you are looking for these breakouts into key levels. So yeah, just be aware that if the market doesn't agree that we're ripping, then that would be the place where they would dunk it in one way or another. So those are your takeaways, and those are Camarilla pivots. So I'd love to take some questions, starting with anything Cam pivot based, and then see how much time we have there. And I'm going to have to jet in about 10 minutes here. So I'm going to go back over the comments now. And wow, we have over 100 people here. Thank you so much, guys. Sorry I'm a little rambly today, but yeah, Cam pivots, good stuff. So give me one sec while I go over the questions here. Turtle traders use these as well. How about that? Very cool. All right, Mike's got better stuff to do. He's slaying tuna. I love it. Man. Good stuff. Yeah, I'm looking forward to starting my weekend here too. But always good to wrap up a week with some nice trade review. Okay, going through comments, see what we got. A lot of comments, not many questions. Interesting, but glad you guys are using the chat here. Hey, extraordinary cave trader. So 9 minutes ago, what were we talking about 9 minutes ago? When there's volatility? Yes, essentially, I think we were talking about general market conditions, and if there is a market that is very low volatility, and then you start getting some increased volume, increased moves, and you start seeing like, okay, it looks like it wants to test its H4. You might be more inclined to say, okay, well, we've already compressed and accumulated, so maybe we're ready to get that volatility expansion there and get the breakout. If you are, trading in a hot sector that's overbought already, then maybe you could be more prone to fading into those H4s at a level with Confluence, maybe a high volume area, previous swing high, something like that. So yeah, just try to use the market conditions to kind of help frame where you think a trade is going to go and how you take it. So Adrian is talking about HCC. That is, yeah, coal is very cool. Well, I don't know if it's cool, but it's a cool sector to be interested in here. I think. Oh, I see a pop up from Tyler too here. Thanks. Sorry, distracting myself. Coal first. So yeah, coal. I think it's got a lot of room overall. I think there's a lot of potential for the sector overall. That and solar are actually the two areas of energy that I'm most interested in, besides the nuclear space, which obviously running very hot there. I'd like to see some diversification if the AI trade narrative picks up again, maybe with NVIDIA earnings or something, and we start looking for alternative ways to power these bad boys that aren't just nuclear. Obviously, that's the best, the best solution, but we're going to need stopgaps. There is going to be a market for alternative energy sources, and the charts look good. So let's see. Let's switch over to charts real quick, and we'll wrap up there. All right. Wow, they had a big week. Wow. Okay, yeah. So I am sad that I missed this because I had charted this out here, and then I just got distracted apparently this week. Or on one of these fake breakouts, I was like, maybe it's just failing. So I think these charts look amazing. Coal in general. Let me show you what I see. What I was looking at when I was charting it down here is on the weekly. It's got a nice double bottom trading into the previous range here. Is my chart not up? I apologize. There it is. Okay. I got to learn the intricacies. I was just getting comfortable with Streamlabs. Okay. So here's HCC. Thanks for your patience, guys. Down here, we have the big volume shelf. This is where I was watching. We have a couple areas of interest here. What we're going to do is mark off the previous major range. So you see we have that. Price retests it, really clean bottoming, double bottom into that. And now I think it's going to want to test this previous range, which it came up, tested violently, and is now pushing up through. So we did get the first move that I was looking for, which was essentially a high volume node to high volume node. So right here, I wanted it to tag up here and digest, and then maybe backfill a little bit, which it actually backfilled completely. Man, I wish I could have gotten long right off that backfill. But then, okay, we have the big base. We push up to the first base. We retest the base. Now we want to push up to the second base, this big point of control here. So we did get it, and lo and behold, there are sellers there. Super textbook price action here, level to level trading, beautiful stuff. Now we have to wait and see. This is a wild, sloppy, crazy move, but it's explosive, right? So I would keep these on your radar for sure. When we zoom out, what we see is that these have been basing for a long time, really long time, and they could have a lot of room to move up. I like HCC. It looks high quality. There's a few others I'm watching too. And METC looks like the strongest name. This one's incredible. I mean, just what a Chad. Like, look at this chart. This is super, super constructive. I love this name. This one I'm keeping very, very close to the top of my watch list. It's attempting to break out through all-time highs, I believe. All-time highs, yeah. Wow. It's crazy. It looks like it just wants to break out on the monthly RSI, and I'd love to see it get super hot like it did before when it was breaking out. I see this as a very explosive base. So this is like a top watch for me, METC. You also have BTU in the space. This one looking very similar, just basically trying to figure out how to navigate this steep 200-day moving average that's falling down. I think that it is eating away at this level, this high volume. Then this all becomes a base, and it targets up. Whoops. Up here around point of control. So I like all of these names. One more for you, AMR. Wow, look at that. That's clean. All right, so I think we long the back test of this volume shelf if we get it around 139-ish. 139 to 140-ish. I'd buy 140. So yeah, keep an eye on those for sure. Yeah, I think coal's a very interesting space. Also, how's FSLR doing? Okay, this one maybe needs another rejection. This is ugly. But this is one that I'm keeping an eye on because I do want it to work. This one could be insane long term when it breaks. Like what I'm seeing is like leading stock in a very unloved sector, but I see potential for this to go much higher. Okay, what else do we got here? Hey Tyler, sorry if I missed that. Let's see. Might have missed it earlier, but what time intervals do you use this on? 1, 5, 15? Yeah. So in general, I use this for day trading. So either a 1 or a 5 plus a 15, and I reference the hourly. So just the same as my usual setup there. I want a setup to appear to me on a 15 or a 5-minute chart, and then I'll enter specifically on a 1-minute chart, and then I'll use the 5 or 15-minute levels essentially to manage risk. So, extraordinary cave trader saying, so most breakouts are based off of volatility with the bands. Let me show you. Get our Keltner channel up and our Bollinger Bands. So most breakouts happen when there is a period of significant compression and then short-term volatility kind of breaks above the average of that compression, and it starts to kind of catch on like wildfire and build up and build up. So that's a good example. I always like using this coin example. Oh, looks like it's time to maybe buy coin again. So what do we got? Right here is where it enters tight volatility contraction. And then when you zoom in, it starts to kind of push up. And when it actually, this is a bad example because I'm on the weekly. There we go. Okay. So yeah, there's the tight contraction here where it's getting like super, super tight short term. And then when the volatility starts to short term, pick up and, can be volatility to the upside or downside, but the size of the moves are starting to increase, then this kind of sparks that's like the catalyst to exit that squeeze that it's under. And then you get the expansion. So the breakouts are based off of like, you want to see the change from that really tightening to starting to get untight or, to get unwound, uncapped. And then you're looking for expansions through them on each time frame, up and up and up. And when you close the candle through the Bollinger Band, that's the signal for that time frame. So for example, on the daily chart, this was the okay, off to the races, sign when it closed above the Bollinger Bands and the Keltner channels. So then you're just off to the races, and you play that until price returns back in the Keltner channels, or Bollinger Bands return back in the Keltner channel again, indicating that the squeeze is back on. So you could have done it there. And if you could see, like, that's the day that next day, like, boom, just fell off a cliff. So that's the easiest way to kind of gauge whether a stock is in a squeeze based on the Bollinger Bands. And then once it was in that squeeze on the daily, then we look for the weekly trigger, which, let's see, when was the daily? The 18th. So it got the signal just a little bit later, but then it was unable to hold that. And we could kind of see that on this candle here, it rejected the holding that Bollinger Band again, and that was kind of the beginning of the end there. So yeah, I hope that helps. There's a lot of factors to the to any breakout, but that's how I would quantify them, with the Bollinger Bands and the Keltners. And if you'd like more in-depth look at this, just go back to the Bollinger Bands and Keltner channel squeeze trading webinar about 2 weeks ago, 1 week ago. It was a recent one. Yeah, let's see. Got a few more minutes here. I'll try to get through as many as possible. Nuclear feels overbought, hoping for some dips. Yeah, absolutely. I'm still in OKLO, but pretty close to getting stopped out. I got stopped out on half of it on the close through there. And if it gets down to here on a close through there, I'll get stopped again, and I'll wait for a back test of this zone, and maybe it undercuts a little bit deeper. But nothing's changed long term. These things are textbook cup and handles trying to break out. They're going to probably back test this zone, that 70 handle at least. And as long as that holds, it should be explosive. If not, then we could entertain the possibility of really aggressive, like rising wedge type thing, which would probably target this 50 handle or something. But in general, I think the space looks strong. I mean, heck, look at that. VST is crazy good. What's VRT doing? Yeah, all the data center names look strong enough to me. I think there's still plenty of room in the space. Nuclear energy, data center, all that kind of stuff. Man, this name loves hitting these upward trend lines and then just dying. So interesting. Okay, yeah, no, I'm with you. All right. Uranium still speculation. Got an early. Beautiful. Yeah, I was early for being early on the uranium trade. And I got a lot of it, but I did not catch as much as I could have. I was too bullish maybe 3-4 years ago. MP, good run in from January trimmed. Oh man, you're in everything great. Dude, you're crushing it. Awesome. Let's see. So yeah, when there's heavy pullbacks and heavy sells, then it hits VWAP for balance, I guess. Yeah, in general, that's what you'll kind of tend to look to see. Okay, we have the heavy sell at the key resistance level. Next stop is going to be to come back down and test just a reversion to the mean, to VWAP, and then that's the big point to watch, right? Because it could catch VWAP and the average buyer could still be green, and then it could retest for a reset up of that breakout. It could just straight fail though. And the area where we'll be able to tell that is that mean, or that equilibrium of the range, which, on any given time frame, it's the 20 moving average. The VWAP is another great, area that should be right around there, especially for day trading. Yeah. So totally, dude. Let's see. We have any other good questions? MPWR just getting started. That's a name I haven't heard in a while. Oh, okay. So what do we see? We are out of the squeeze on the weekly. That's good to see. Just getting out of the squeeze on the daily. I like this. It's holding all of the areas that I'd like to see very tightly, very neatly. Long term. So let's see. Had a parabolic run here where it's in price discovery mode. Chopped down to its long-term core of support, which was basically the initial flag before parabola. Okay, I'm trying to kind of find a fractal pattern here. I feel like there might be one. So coming up to sweep this and back down to the core level one more time. Okay, so I think it probably is going to want to try to do something like this. And then this is a weird one. Okay, if it ramps like that, These should curl up nicely, and this one will inch up to maybe about like here, 750-ish or something. And then I'd like to see the real. I don't know. This is a weird chart. I need to look at this one more, but it does look very strong though. I'm just not sure exactly how it gets there. Is it just like gearing up for parabola? Like that could be possible. Man, the monthly looks great. Keep it simple, right? Like there's your support, or there's your demand zone. Confirmed. Next stop up here somewhere, and probably much higher. All right, this is a fun one. Maybe like a Livermore accumulation cylinder type parabolic type thing, like SMR did. All right, cool. Yeah, this is the list too. All right, guys. I am just about at my heart out here. Let's see. I will wrap up anything left. Let's run through just the last couple charts in here. We got CLSK, we got NEM, we got GEV. You still like GEV? Yeah, I guess not. Why not? It's still a leader. What an insane chart. Yeah, give me a back test of the gap and I'll get in. What a silly stock. Man, it just never went down. Wild. Okay. CLSK. We're doing all of the crypto stuff again. I see. Clean Spark. Oh, that looks like it's either about to die horribly or catch. But I mean, it's at 10. It's at the big volume or point of control. It has failed to break above the monthly there. Failed at its major pivot here. This looks like bad. I'm not going to lie. Like it is at support, but it does not look like it's strong into support. Looks like it's a bear flag that's starting to break down. Nice volume increase. And this is on earnings. I don't know. I don't like this name anymore. I used to like it for miners, and then now I like CORZ. Yeah, this looks like it's in danger of breaking this trend line and just really puking. You could argue like this is a fake breakdown look. There's a lot of reasons why it could catch at this area. Confluence of flattening supports. There is a lot of volume at this area. There's more down here though. I think it wants to revisit that, but it's got the round number too, the 10. I would expect this thing to start moving though. It's out of the squeeze. I think it probably would be more likely to go down. Yeah, Mara looks terrible too. Marathon. So I might short these. These look like trash to me. Short these with the target of, yeah, look, it's losing the equilibrium too. See the 50% of the range. So this is like textbook short to me. Losing point of control, losing key moving averages, losing the 50% of the range. It's a piece of crap overall. Fundamentals suck. And so yeah, keep an eye on this short. I'm watching that. And then NEM, some gold boys. Check that out. Oh, and I don't know if I've mentioned, but USAR, this is the chart, boys and girls. Everybody, this is the chart. This is what I would like to see people dump their MP winnings into. And this thing could go much higher. Lots of flow on the 37 strike, which would be a ×2 measured move of the initial, it's just like its whole base essentially. And look at the volume accumulation. Like this is so dang bullish. Just buy this and don't look for a month. You'll be happy. Okay, on that note, let's see. All right, sorry, I had to go back and forth from the comments. I'll run through these and then I do got to bounce, guys. Natty G, interesting. Okay, we can talk about Natty G really quick. We had the gold scare with the tariffs. I got to take a look at the actual price action on that. And you want M&Q futes. Okay. Just do NQ because they're the same thing. Okay. I mean, it's bullish, dude. I don't know. I don't have levels for you now. I'll have levels for you after I see price action on Sunday. Hit me up. In general, like we're gonna see if we can sweep the high. Got to see what it does if it sweeps the high. It probably wants to sweep the high and come back down to 23,500, 23,400, somewhere around there, maybe. Or it just sweeps the high, back tests it, and breaks out super strong. Like they're both possibilities. I'm not really interested in. I'm just going to play the range. Like, it looks bullish. I'm going to expect it to break, but I'm also expecting it to pull back a little bit after it breaks, and then I would expect it to push higher at some point as long as it holds the equilibriums of the given time frames. I mean, heck, we can cook. Like we can push high. We can get a blow off. I think. I'd still like to see the 650, but just got to play the levels. Got to play the zones and see what it does at all time highs. We are pretty squarely in the sell zone, previous sell zone. So we just got to see if that flips. So far, this is a lot more constructive than the last test, and this is where we fell off from. And this is also where they tried to reload longs and then failed. So here was a little failure, but it held the higher low. I would expect it to make a very good attempt to make all-time highs. And we'll just watch what price does there. In general, if we get a dip, as long as we are over 625 is all I really need to be bullish long-term or mid-term. Short-term, I want to just see us hold over like probably see this pivot here, this high volume shelf here. So as long as we're closing candles over, like I think maybe we revisit 633, and that'd be a really good time to buy, good level to buy. But as long as we're over that, I think it's totally fine. What I'm seeing on the volume profile here, look, it's like let me go out a little more. Like there's just a lot of, let's see. It's kind of showing what I'd like. So in general, if we're bullish, we want to see a P type formation on the volume profile. This still is more like a B. So what we could see, there's just like a big gap here that I wouldn't mind seeing fill out. And so more shares traded at this zone here. So maybe that would look like a dip on Monday and Tuesday. Back to that 635 or potentially 633. Probably doesn't need to go that deep, but it could. And then this could fill out like that into a healthier kind of P. We just want to see more shares traded up here, more price acceptance. The other possibility is that it only would need to fill back here, if at all. So then that would be looking like a dip to 635-ish before pushing higher, back testing and going for the all-time high. So yeah, keep an eye on 637 to 637.50. It's going to be the level that needs to hold on the back test for immediate momentum on Monday or so, or in the futures. Then you're going to watch this swing high, 638.20. And if we accept price over here and we hold off of our 635 or whatever, and really over 633, then we will eventually work our way to take this high, all-time high. And then we just got to watch for price acceptance there. So yeah, pretty, not a ton to talk about. Good week, but we just got to watch and see. Awesome. I am tired as heck. Mike, I feel you. I gotta run out and start my weekend here. I appreciate y'all so much. Next week is going to be, oh man, I'm blanking on what it's going to be. But it's going to be a webinar. It's going to be fun. We're going to learn a lot, and I'm also going to be going over what I'm looking to trade the next week. in the last couple minutes of these as well. So kind of like what we did today, but a little more structured. So you can look forward to that. People seem to want to know what I'm going to be doing next time. So yeah, I want to give you guys access to that. Sorry, I have to run. Usually I like to hang out in Discord after for a while. So we'll be doing that next week as well. But this week I do have some prior engagements. So you guys are all awesome. Enjoy your weekend. I'm just rambling here, so I'm going to let y'all go now. Have a good one, guys. Take care.